Okay, guys, happy Wednesday. It is FOMC January, and we just heard what Jerome Powell just spoke on. Now, on Sunday, I did say this. I was letting you guys know that personally, I didn't see interest rates to go down by any points. I thought it would make sense if they keep it the same, because there's really no rush right now on starting the year just lowering interest rates when they just lowered the interest rates from 4.0 to 3.75 in the end of last year. Since it's the end of last year, we really don't even have a full month of data yet just to see what that did. So I thought it was interesting that the decision was made that they did not bring it down, along with the fact that Uh, you see Trump is forcing the hand of the Fed, and the Fed wants to make sure too that they keep things under their plans to manage interest rates according to the data, the GDPs, unemployment, and tariffs, all of these things. But um, not lowering the interest rate doesn't mean a lack of confidence in the economy. In fact, it's about it's just like when you're driving on the highway, you're maintaining a good speed limit, not because your car can't really do the full dash, but because you feel like it is safer to get to the destination. And then you'll lower the speeds if there's any incoming traffic, and you'll increase the speed if there's a lot more free flowing freeway on the road. So it's the same way I kind of had an idea to see like if the decision would be made as I anticipated it, and as we can tell, the numbers did not go down. I think this is a good look for the economy. It means that if there will be some interest rates to be dropped, it will happen maybe a little bit later into the year, maybe third quarter, fourth quarter, or just to give enough time to see how the economy really is doing at 3.75. On Sunday, when we went down into the previous interest rates, we said, man, we came a long way from 5%, 4.75%. And so the median would be around 2.5, 3.25. Like these are usually steady numbers, and we're at 3.75. So ideally, as I had said it on Sunday, if we get interest rates to 3%, that'd be beautiful, right? It's not too much. It's not also putting pressure on the American people, which we're already feeling the pressure. So, that's just us understanding what interest rates would reflect our day-to-day lives. And I think the more we continue to cool down and keep things steady, the more we'll be on our way to seeing some sort of balance to what's going on. Now, to be honest, that has not slowed down gold at all. It has not slowed it down whatsoever because the banks are also buying a lot of gold. Japan is buying a whole lot of gold. And I just found out you have real American companies such as Tether, which so happens to be USDT. They're buying a lot of gold as well. All right, let me just go ahead and clear any drawings. Somebody was drawing here. So I found out Tether Gold Holdings. Tether is buying up to $1 billion of gold per month. Good God, that's crazy. And so Tether currently now holds more gold than many central banks as its market cap rose to 2.24 billion. So basically, USDT is backed by gold, which is ironic. I think it's a good move because um, for them to be able to sustain and play their role into the crypto space of stable coins, they got to find somewhere to move the money if we keep on getting exactly the matching prices of transfer. You know, I shout out to USDT, once we're trying to move our cryptos and such, it feels good to see that whatever currency you transfer it or convert it to ends up being exactly to the dollar, maybe a few cents. That's how they're able to actually not charge us as much to make those transactions happen. So they're pretty much back in gold. So I think it's very smart. Let's go ahead and read. On Monday, the world's largest gold-backed stablecoin, Tether, published its fourth quarter performance, showing that it now accounts for more than half of the entire gold-backed stablecoin market. In the report, Tether noted that last year the global digital market saw its valuation to 4 billion. Uh, so this is good stuff. This is good stuff. In late 2025, Tether also ranked among the top 30 global shareholders. Top 30 global gold holders, surpassing countries like Greece, Qatar, and Australia. Okay. This is good. So this is why we're also seeing that gold is surging past $5,000 an ounce. You got institutions buying gold. You have, oligarch families buying gold. You have big institutions buying gold because of AI, and we also have a lot of countries because of uncertain times. They're making sure that their money, their government-backed money, is backed by gold. And among these people is the government and the US Treasury, which is making sure their strategies as they are purposely making the dollar a lot less expensive. The US dollar is going down, making it cheaper for exports. Um, but of course, that means for us to combat deflation, we have to put our money into inflationary assets. So this is why we're seeing a lot of this going on. Now, on the technical side, we've been noticing things that we have spoke on. For example, even in the chat, we were talking about how many of the retracements that are going on with gold happen in a very specific way. For example, last night we saw price pull back by 8 p.m. They never looked back. They didn't even give us any sort of retest for the second time just to buy. Instead, they just gave a one tap pony, and it's either you're in the trade or you're not. This has been pretty tough for me personally because we've worked so hard as traders to be disciplined and not just settle for any type of setup. So now you're getting price pulling back one time and just going crazy. And with gold these days, if you don't get in at the perfect moment, you're now having to go past sometimes 200 pips in stop loss just to get a good entry uh, around the areas of interest or demand zones. So, but as we can see it, like on a Tuesday or Wednesday, if you can find yourself an Asian session entry, these sessions tend to do well, very well. And within an hour's time, you're looking at 400, 500 pip moves. And if you hold until the next morning by 8, sometimes you'll be surprised how many pips in profit that you'll be. So these are some of the things I'm also transitioning, trying to adapt myself to, because I don't think we're done buying anytime soon. I think we are basically uh, setting ourselves to see gold be worth 6,000. I'm not sure if they're gonna pull it back in. But today, because we didn't even see price move too much, lets me know that maybe tomorrow we'll see continuations to the upside if price does maintain itself. So I did not expect price to be this high this week. We started from Sunday. We saw a retracement Monday evening. And as I was saying, you guys, I love to pay attention to behavior. Even though I'm missing a lot of setups and trades, I am paying attention to the things that are happening. I'm like, oh wow, okay, cool. It looks like if in the afternoon of New York, price pulls back, you best believe by 8 p.m., an entry is more than likely an opportunity with stop loss below New York afternoon lows, or in this case, we saw the gap get filled. This is the first time we've seen a gap get filled in like 3 weeks, I believe. What is this? Tuesday, January 21st, we did see the same exact play. Isn't that crazy? Last Tuesday, we saw price do the same thing. Yesterday, and then yesterday, price did the same thing as well. We saw a retracement, and by 8 p.m., they was rallying. Now, Tuesday, here, we saw the same type of retracement, and then the rally was um, just as crazy. 1,200 pips from 8 to 12 a.m. So that time window, 8 to 12 a.m., it's a lot of pips to be made on Tuesdays, starting from 8 p.m. By 8 p.m., you want to make sure you enter your positions, give yourself some breathing room, stop loss below the afternoon low, or sometimes the previous session low. All right. These are some of the ways that you will be passing your challenges. These are some of the ways that you will be making some really good gains, get some payouts, grow your accounts in this crazy parabolic market. Wednesday too, we see price if in New York in the afternoon, price actually does retrace, then definitely get ready by 8 p.m. on a Wednesday. Once you see the retracement, take that trade, especially if it's on a 1 hour retracement. You definitely want to get in Asia until the next morning. You will not regret it. You will not regret it. Personally, for me, I did not trade today, but I did see something that made me very much content. Nowadays, per usual, gold likes to make the retracements in New York, retesting London, and if worst comes to worst, they might come back and retest Asia too. When the actual session starts, these candles will look so intimidating as if they're going to keep selling off. The trick is to go down to the 5 minute time frame. Make sure you mark out the previous session to the left, which is going to be your London and your Asia. Once you mark out your London and Asia, wait for price to dip. By 10:15, you should be able to let the candles tell you what's about to happen next. Put your stop loss below London or Asia. Hurry and take the trade. It's going to be so quick, sometimes you might miss it. And that's the most frustrating thing. FOMC passed at 2 p.m., 2:15, FOMC, um, they usually have their meeting every time, every single time, year after year, every time. Uh, Monday, what about Monday, Alice? I see it's a couple more people here. What's up? What's up? What's up? Yep. So these are some of the ways that I have been paying attention to the market just to transition and get myself more comfortable around these new parabolic ways of price action. For example, on Fridays, the same thing usually happens as well. We get a retracement. Let's go back to a Friday from the previous week. We get a retracement, but by 10, if you're entering a trade, make sure your stop loss is below the previous session. Okay. Now, as I was saying about Fridays as well, if you so happen to get a good entry on Friday, hold that position over the weekend. When the market opens, there might be a big gap like they were doing, that like they have been doing, and you'll most likely see a lot more profit than you expect. All right. So right after the market opens, if you give it about a good hour or so, move the stop loss into profit. You will be you will be satisfied. Hmm. All right. So moving forward, Monday's price action looks so far away from we basically moved, I believe, 2,000 pips since Monday. But again, as you guys can see, we had a Monday retracement. And by the time it was 8 p.m., if you're not in the trade like me, I missed it again. So I was expecting at least by 9:30 to get in the trade. But yeah, it's just been weird for me lately. I've not really been able to catch the setups like I usually would. However, um, you do take notes and you keep it documented for the next opportunities. 5,300 is where we're at. You guys know I've said this from time to time. I love it when FOMC happens, and then the next day I show up and I see price pulling right back into um, FOMC price action, meaning like you'll notice price sometimes, in New York comes back to retest, let's say 53.16. They pull right back into where price was in the previous day zones. That typically gives me more of a better confidence to get in instead of trading FOMC. I think at this point in our trading, a lot of us have definitely gotten tired of trying to guess things and lose accounts on days like FOMC for no reason when the next day is a lot smoother. If you haven't made peace with it by now, that's okay. If you have found some setups during FOMC in the afternoon, that's cool too, right? But we're just talking about safety. I also do notice too, just like I was saying earlier, that the New York session FOMC can be a hit or miss. Like I noticed that yes, price did pull back into London and the 9:30 open by 10:15. That was a clean setup. Within 30 minutes, this thing was already up 370 pips. I'm not sure if anybody caught that today. Did anybody trade that in the morning? Yes, no. I'll check the chat in a bit, you know? But looking at US 30 was a mess. First thing I saw today, even though he usually like clowns me from time to time when we're on the phone, Emmett was having such a great winning streak, and then this right here called him slipping. He lost about 40 G's. So he looking like me right now, humbled. So uh this is why like everybody's experience is different on the charts, even if we do come together from time to time just to discuss the charts. It all depends on what you saw at the time. Can't tell me this candle wasn't fully bullish, but nobody could say that they saw price rejecting this fast. But that's to be expected on an FOMC New York session in the morning. Now, ever since we did have Jerome Powell speak, we see that rates remain unchanged. Typically, that means that translates into the market saying, oh, okay, well, nothing has changed. We keep going. We keep doing what we were already doing. So I wouldn't be surprised since we started the market this week for US 30, we saw that price started from here, and in London it started rallying, kept the range low, but still so far this week we're respecting the price action of this demand area. So I wouldn't be surprised if tomorrow we see a buy from here. We would have to find out, buy New York, see if the breaking structure happened, uh, breaking retest, and then we'll be able to get into good trade. If still by Asia and London, we see that price is still respecting this low. I wouldn't be surprised if we see some buys. We'll see though. We'll see, right? NQ or Nas, we saw the same happen for Nas. I was kind of surprised, but yeah, they were not waiting around. There were some company earnings that happened this week, which pushed Nas a little higher. And we also heard too that for the first time in history, SPX finally hit 7,000. That's crazy. So the economy might be slow, jobs might be scarce, but these companies are still improving. And that's where sometimes we get it confused and it just seems a bit like such a disparity. You're like, bro, it's a lot of people not working. Things are tough, prices are high. How is it that the market keeps pumping? Well, it's these companies, it's these earnings, it's these investments, it's all that money that was made decades ago, including the beginning of 2020. That money is being recycled. It's being recycled. So that's why like we gotta stay focused and try and put our money and our skills uh to combat this generation and make the right decisions, make mistakes, learn from them, and keep going. All right. So I believe tomorrow as well, we will see continuation buys for gold. And I want y'all to be careful how you think price is going to play out when you see sells. If price is selling and it doesn't even make it too far past the previous London session or the Asian session, I hate to break it to you, don't try and capitalize on sells for too long because they will stop and reverse when you thought price was finally going to sell off. I'd rather price actually give us the full proof that it's selling off, and then I show up in the next session to take the buys instead of me trying to force think that price is gonna sell and then it doesn't. I've seen this happen so many times. Even around 12 to 2 p.m., you're thinking it's gonna pull back very, very deeply, and then no, it just kind of keeps the retracement short and then it pushes. So I wonder how the experience has been for you guys so far this month. I see a couple people have been seeing good progress, but what about the rest of you guys? How has it been for you so far? Has it been going well? Has it been so-so? Are you at break even? Talk to me. Put some of your answers in the chat. Just the waiting game. Okay. That's I can't complain about January. I love that. I love that. Okay. As usual, I guess you guys, the rest of you will give me your feedback after the webinar on Telegram or whatever the case is. But anywho, I still think gold is bullish. Um, we'll be checking in for Asia. And the next stage is to find opportunities now that I think I've pretty much understood how we are moving at this point. 10 a.m. entries, 8 p.m. entries, Friday entries, held until the next week over. These are going to be my new ways of getting back consistent. I hope that actually helps you guys figure out an idea on how to um, tackle and take advantage of the market as well. But that's it for me. I was able to get your feedback, got that done, talked about the fundamentals, check mark, talked about the technicals and the strategies. Any questions? Oh, I think the new way of trading is just waiting instead of reacting like it's 2021. Yeah, the market has changed. The market definitely has changed a lot. Uh, it's not easy, bruh. It really isn't. And it takes a lot of sitting down and painfully watching certain markets rip, and you're like, bro, okay, uh, all right. It can be very discouraging. And one thing I do find too is that like sometimes trying to make up for lost time and you overdo it. So let's just be mindful. Just be mindful. Okay. Well, you guys have a great rest of your day. Uh, I think that pretty much covers it. I'll see you guys next time. Peace.